A very good morning and good afternoon, ladies and gentlemen, and welcome to Fortis Healthcare's Qtr4 FY18 and FY18 results call. The call today is being led by Mr. Ravi Rajagopal, Chairman of the Board of Directors of Fortis. With him is our Chief Executive Officer, Mr. Bhavdeep Singh. We have our Chief Financial Officer, Mr. Gagandeep Bedi. From the SRL team, we are joined by Mr. Arindam Haldar, the CEO of SRL, and the President Commercial. We will begin this call with some opening comments by Mr. Ravi Rajagopal, post which Mr. Bhavdeep Singh will give his view on the hospital business, and Mr. Haldar will provide his comments on the diagnostics business. Subsequent to that, we will then open the call for questions and answers. Over to Mr. Ravi Rajagopal.
Thank you, Anurag. And good evening, good morning, good afternoon to all of you, and welcome to the call. I just want to cover a few things as a new member of the board and chairman of Fortis, and share some views with you before I hand over to Bhavdeep. I think there were three of us who came onto the board end of April, and since then we have been spending a lot of our time understanding many of the legacy issues, particularly a lot of the promoter-related issues that led to the investigation being carried out by Luthra, the law firm. And we had received the report in the first week of June. But even prior to that, we were trying to get to grips with and understand the controls and the transactions relating to the promoters, the group companies, the related parties. It's taken a fair bit of time. And understandably, once the report came out, to digest its findings and to assess the way it should be reflected in the accounts and disclosures, both for the management and for the auditors, has understandably taken a lot of time. In a way, regrettably, it's taken more time than we would have liked, but it's been the nature of the unknown, where it was difficult to assess what exactly were the consequences and where to sort of draw the line. Now, we were fully intending to release the audited financials on Monday, but what we have had to do is, as a result of conversations with the auditors, we've had to, or rather the board has had to take a much more involved effort in really understanding the controls and process framework within the company, and make sure and directly certify to the auditors that apart from the promoter override issues that were the substance of the Luthra investigation report, the board was otherwise reasonably assured that control systems everywhere was working very well. Now, you can understand this process would take a matter of not weeks, but some days, and which is why we decided that in the best interest of everyone, including our investors, it was prudent to release a set of unaudited results, which we did early this morning. But having said that, as we have declared in our results, we have clearly said that this is also to facilitate the bidding process, which I'll touch upon in a moment, as also the fact that we don't expect any material change in the final set of numbers. And we have said that with some degree of confidence, having seen the extent of audit that's been completed, which has been near complete, I would say, but for this assurance the directors are seeking personally around the robustness of controls. And we have taken an abundant cautionary view here in reflecting pretty much all the issues that have come out of the investigation, and which is why you would see a fairly large number below the line. So that's one part of it. Now, the other related part is that we do realize that what has happened in the last 4 or 5 months of various events in the company, there's a clear need to restore the morale within the organization. There's a need to rebuild the reputation of the company as a company that seemed to be transparent and having very rigorous systems and governance standards with other leading companies. And this is an effort that we will be spending a lot of our time on as a board, along with the management. A couple of the steps we've outlined in our disclosures this morning include, but is not limited to, carrying out a further inquiry, which will be done by Luthras, in terms of just establishing or clarifying employee involvement. That's number one. Number two, we are in the process of appointing an external firm to once again do a thorough review of the control framework within the organization and prove to us that these are systemically strong. But of course, where there are gaps, we will strengthen it. We're also getting in an IT person to make sure, again, the possibility of management overrides on the single instance kind of ERP the company has are indeed not there. And we're also doing, with the help of Luthras again, a further review of all group company issues to make sure there are no related party overhangs and making sure that all transactions are arm's length. And if there are related party remnants still there, then we would have that much more of a rigorous review of that and come to the right sort of conclusion. So the point here is to say that the focus of this new board has not stopped with the results of the release of the unaudited results this week or the audited very, very soon. But this is something I can see that for the next 4 to 6 months is what a lot of our efforts are going to be engaged in. So that's around our focus and our objective to get the governance standards back to where it should have been. The second thing is, on the question of the audited results itself, what I can say is that it should be out fairly soon. I wish I could commit a date. We do have a date which we're working towards, but I can tell you it's not in the nature of weeks, but it is going to be fairly soon. And I'm hoping we'll have more clarity on it in the coming days. Again, as I've said earlier, the audit is substantially over, barring for this piece of work that needs to be done, and hopefully the numbers are not going to show any material change when they ultimately come out. The second area is around the bidding process. Now, you're all aware what the timetable is. Clearly, as per the original timetable, the audited results was to have been out Monday, which was the 25th. Today is the 28th. 27th. And therefore, given that slippage of a few days, we will have to factor that in and hopefully readjust our timelines. So we are again talking of the bidding timelines being relatively on track, barring for this a few days delay that we've just had. So again, we hope to be coming out with a more formal sort of announcement very, very soon. But we are talking of this whole process getting back on track fairly soon again. So these are the few messages that I wanted to share with you. What I can maybe as a closing comment, I can say once again, and I'll reiterate that this board is committed to bringing back restoring the morale of this organization, which has gone through very tough times. The management has had to put up with a lot of adversity and pressures, some of which you would have even read in the disclosures today, and that are words that the investigation firm has put out themselves. And there is a need to bring this, the organizational health back to where it should be. The second thing I talked about, transparency and governance standards, and that will be a key focus. And the third, equally, if not more important, is to make sure that with the results released this morning, we have displayed confidence to the potential bidders on the one hand, as also to our financial institutions, because there have been liquidity pressures, as you well know. And yes, this release signals the fact that we stand by the numbers that we've done today. There may be a bit of uncertainty, but hopefully that will come to an end very soon. So with that, let me hand over to Carl, please.
Thank you very much, Ravi, and good afternoon, good morning to everyone. It's clearly been a very interesting quarter, and quite honestly, it's been quite an interesting year as well. I think as an organization, what we've gone through for different reasons has been quite significant, quite substantial. Apart from the fact that you're all aware that the Indian healthcare industry today is facing some significant headwinds with respect to whether it's regulation, whether it's the public's perception of healthcare, public's perception on doctors, the whole debate around the value proposition around healthcare. Clearly, there's been a significant, substantial amount of noise around that, and that's something that all of our partners in the healthcare industry are also dealing with, and it's a topic of most forums that take place today around the industry and around healthcare specifically. Then I think if you think about what else happened closer to home over the second half of the year, we had the situation with hospitals in the country, but between Max Hospital, BL Kapoor, Medanta, Fortis itself, we had high-profile cases that got us a tremendous amount of attention and a lot of scrutiny, and we all went through that as well. But in addition to that, while the industry has been going through these things, and I can tell you that most of our colleagues in the industry will tell you that the last 12 months have been quite trying and quite challenging. We've had our own internal challenges as well, and that's been just a lot more that's come on the organization. So I won't go into all the details. You're familiar with what's happened. I'll talk a little bit about what's been the outcome and where do we go from here, because I think that's actually the most important thing. Now, you've seen in the numbers today, our performance in Qtr4 was okay. It's not, I would be lying and be extremely insincere if I told you that I thought it was a great quarter. It wasn't. It was okay. It was okay considering the environment, considering everything that's happening. Having said that, you've noticed obviously that we have some one-time activities that are taking place in this quarter, a function of some of the things that Ravi just alluded to, a function of some legacy issues that I think as an organization, we've made a decision that we need to move forward. We need to have a fresh start. We need to take this organization and make sure that we are in every way, shape, and form doing everything we can for every single patient, every single hospital in our network. And we've made some decisions around that, and clearly, obviously, you're aware of that. There are also some impairments, and generally speaking, I think in the context of India, while impairments are very frequent accounting entry in most parts, I think this is something that we'll see a lot more of in India in terms of organizations recognizing that they have to take a true look at whatever assets might be on the books. And we've done that as well. And I think that's just a good, responsible business. So I think we've made the right decision there as well. With all of that said, where we are today, again, coming out of a challenging quarter, coming into a challenging environment, we're very pleased that we have a new board. Our experience over the last 6-7 weeks has been one that's been highly collaborative, highly transparent, and collectively working together to make sure that we do things the way that they should be done, and we move forward in lockstep to ensure that the organization reflects continuous improvement. We've also, in the same period of time, gone through a difficult period of time because, as you're well aware, the organization had some liquidity issues. And by virtue of that, we've had some challenges with respect to being able to do everything that we need to do in every single one of our hospitals when it comes to fulfilling our promise to our patients and to our attendants. So with that said, I think as we look forward, I think we have a lot of opportunities. We're looking forward to the audited results, and that should be coming out, as Ravi said, fairly shortly and in good order. We've been giving a great deal of thought that what happens now. So you have an audit component, you have the quarter-end component that we're talking about, we have industry headwinds that we're referencing, and then we have a potential transaction, a potential meeting from a timing perspective that's going to be taking place very soon. Now, with the transaction coming up, and with everything that the organization's gone through, we've taken a great deal of time and put together a build-back plan that we'll share with you in the coming weeks and months in terms of how do you take the organization from where it is now. Recognize and please keep in mind that up until the first half of the year, we actually had a very solid first half of the year. EBITDA was approaching 280 crore, and we were actually on mark, headed towards a high 500s or 600 type of EBITDA for the year. So that's the kind of performance we had, and we're moving in the right direction. We've had multiple challenges by virtue of which we are where we are today. So we put together a build-back plan, just exactly what do we need to do going forward, whether it's from a internal organization perspective, whether it's from a talent perspective, whether it's from an investment perspective, marketing perspective. So we've put together a detailed plan quarter by quarter just to look at just exactly what do we need to do to get our business back, because I think the most important thing for us now, lots has happened, lots of water under the bridge, lots of challenges that we've dealt with, lots of challenges that we've overcome. But quite honestly, as I look around, the opportunity is huge for us. The Indian healthcare market continues to be underserved. We still get very, very good feedback from our patients, from people who come to Fortis in terms of the doctors we have, the nurses we have, the medical clinical protocols we have, and our outcomes are among the very, very best in the industry. So lots of opportunity. It's been a challenging year. It's been an interesting time. We've all gone through quite a bit things that we've never seen before. But I think at the end of the day, it's put us in a very strong position, and I look forward to what lies ahead. Having said that, none of it's going to be easy. None of it's going to be overnight, but I do see us moving forward quite substantially, quite significantly, with better results and a far more better performance as well going ahead. So on that note, thank you all very much. We'll certainly take questions, but I'll ask Arindam to give some quick comments on SRL, and then we'll open it up. Arindam?
Thank you, Vavik, and wish everyone joining on the call a very good afternoon, good morning. My name is Arindam Haldar. I'm the CEO for SRL Limited. I would like to start by stating that the year 2017-18 was actually a watershed year for SRL in more ways than one. We actually started the year with a new operating leadership, with a new CEO and a revamped leadership coming into effect between the months March and July 2017. Also, basis some of the learning that was available with us, this is the business deep dive and analysis that was done by Bain Consulting, who did a project with us late 2016. We undertook a very key and long-term strategic initiatives, which I'm very sure will bear fruits for us in the coming days and years. Some of the key ones that we did over the last 12 months was we rejigged our operating structure by having geographic business units, because clearly, as our learning is, diagnostic is a very local business and there are very few national levers that are available. So we broke the business into geographic business units. We made the new go-to-market plan, developed a new brand plan, and signed on the new marketing investment strategy. We also worked on our governance models, the KRAs and the efficiency metrics. Last but not the least, we started a structured process of cascading net promoter score both for our customer and internal employees, so that you get a sense how we are stand on our service levels as well as employee engagement. If one looks at the year, of course, we saw some serious business headwinds. We lost some business customers, people in the early part of the year. And while the business still grew by 7.4%, it was clearly short of our internal expectation as well as what is the true potential of SRL. Quickly, as we look forward, and we are focused on a few key areas, how to unlock the growth challenges so that we go back to our high growth days in future. We have a detailed plan on expansions of our channel partners. Our brand strategy is in place, as well as we are trying to see how to improve the overall image as well as reach of SRL in the coming days. With that, I would like to straight away go to the Q&A session.
Yeah, thank you, Arindam. Ladies and gentlemen, we will not be taking you through the financial presentation. Both the financial presentation and the press release are on the website of the company. So in the interest of time, we will now open the floor for questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Adi Desai from York Capital. Please go ahead.
Hi guys, thanks for organizing this. I'm sure it must be busy. 2 questions on the financials and the operations. One, I guess, if I look at the quarterly results, one thing that stood out was the other expenses for this quarter increased. Like generally, we have run at about 3.4 billion rupees, and this quarter it ran up to 4 billion rupees. Could you break that down a bit more as to where the increase came from, really, and whether it's more of a one-off nature due to effectively like a transaction happening, etc., or is it more recurring? That was question 1. And the other question was really on the performance. I mean, I wanted to understand the SRL EBITDA decline that we saw this quarter. I mean, honestly, I expected the hospital business to have a lot more EBITDA decline this quarter because of a lot of the one-off issues and industry issues you mentioned. But hospitals actually came across quite all right, and SRL saw a bit more of a decline in operations. So I wanted to understand that. But maybe these are the 2 main questions I have.
Yeah. So, Adi, on your first question, when you look at the SEBI set of results, the other expense line has certain items which in the management results or the investor presentation we show separately. For example, the Forex losses are accounting-wise shown in the other expense line, but when you look at the investor presentation, it is shown as below the line. That's an amount of about 20 to 22 crore rupees. There is another exceptional of another about 20-odd crore rupees, which relates to some write-off on TDS recoverable and the due diligence expenses that we have been incurring over the last year or so. The quarter's portion also comes in this. If you were to exclude these 2, then you will find that the other expense line does not show that much of an increase. That's the difference between SEBI and the management presentation that we sent you.
I see. And I guess the second question on the SRL side, SRL performance.
As far as SRL is concerned, the numbers included between compared with last year, the GST regulation was introduced sometime in July this year, which had an impact of about 2 crores in terms of the expenses going up. The second big change was, as you are aware, Fortis has been running a process along with SRL in terms of going into fundraising and a bunch of other things, for which we incurred legal and professional expenses, which was about 3 crores. There was a provision for doubtful debts for about 1 crore. That was largely led by the fact that we had moved out of the Uttar Pradesh PPP, where we had certain non-recoverables or doubtful recoverables, which we provided. The last piece is a certain bunch of equipments was under a comprehensive maintenance until last year. As the equipments move out of those maintenance and they get into normal AMCs, you do have a charge to the P&L. So those were the 4 big heads. Of this, if you were to really single out and call out what are the one-offs, the one-offs would be the legal and professional expenses and the provision for debtors, which we don't expect to be on an ongoing basis.
Got it. I guess, sorry guys, one final question. I guess a question more for Ravi. In terms of the bidding process, I know you said you will come up with a formal announcement, but should we be expecting the process to come now, bidding deadlines to be post the audited results? Or is it something that from the results that we just announced? And again, I understand if you need to make the formal announcement, I'll just ask a question.
What I meant was we will be realigning the bid timetables that will take into account the audit release of the audited accounts. As I said, we expect the audited accounts to be released fairly soon, if not, pretty soon. And that's the assessment we are making, which will have in it, when we receive the bids, the audited accounts, much like the earlier schedule we had released, and something that could happen post the audited accounts itself. So I think it's best to just watch the space. Fairly soon we will come out with more clarity on this. But all I can say is this is not too far out into the distant future, but much more in the kind of near term.
Got it. Thanks, guys.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. First, on the operational performance of the hospital business, if I look at from what I understand, there could probably be three reasons for this. One, fMRI disruption. Second, probably liquidity issues, and third could be distraction or loss of certain doctors because of the ongoing noise around Fortis. Now, if I look at the fMRI numbers quarter on quarter, they don't seem to have deteriorated. So I'm just trying to understand what were the factors which led to this decline quarter on quarter, and if it is liquidity or distraction, is it fair to assume that things would remain tough on an operational basis for the hospital business for a couple of more quarters till we get a new buyer on board?
So, yeah, I think that one thing to look at is the way the business tracked. When you look at fMRI over the prior year, I think, when we look at a growing environment like fMRI, we actually track ourselves quarter on quarter to see how we're doing. So if you compare the kind of growth we had in the first half of the year versus the second half, there's clearly a tail off there. So that's one. I think the second thing is that, as you rightly said, the industry has been facing some headwinds. We had, as I mentioned earlier, there were 6 or 7 major high-profile incidents that took place between October and December. Our hospital, we had a baby Adya case, as you may be aware of. Max had the twins, the case of the twin babies. You had BL Kapoor, you had Madhata, had a 7-year-old boy. So there were a lot of these cases, and that certainly impacted certain parts of the country more than others, and we clearly felt an impact there as well. But with all that said, the reality is that industry headwinds, genetic things happening in the environment, economic, whatever else it might be, we had our own issues as well. And I think it's a combination of everything that you said, whether it's liquidity issues, whether it's a function of the fact that, so while look, I'm really proud of the fact that it's still recently we actually hadn't lost any senior clinicians at all. What it has hampered is our ability to bring talent in. And that matters a lot, because in our industry, you continue to, because we are not a steady state industry. We are an industry, quite honestly, in India, still in infancy stages. We're still growing. We're still trying to figure out what the finish line looks like. And I think by virtue of that, the lifeblood of our business is continuing to expand the complexity of medical procedures, add new medical specialties, bring new talent in. And we've had a challenge on that front, being able to bring new doctors on, because quite honestly, anybody who's thinking about doing something in life, something different, you want to know that the organization you're going to, whether it's stable, whether it's growing, whether there's some clarity around what's going on. So I think if you add all of those things in, it's impacted us. Now, with all that said, I would say that we're not out of the woods yet. I think we still have some challenges. I think that we need, while I have the good fortune, and when I say I have the good fortune, many of us, who are closely aligned with the activities around the transaction, we have the good fortune of working with our new board. We have a sense of what's coming. But you still have 17,000 people who work in our hospitals. You have another 7,000-8,000 SRL who are still wondering and waiting to hear what's going to happen and how does the story play out. And quite honestly, that matters a lot. So I do think that we need to close this transaction. I think we need to close the transaction from a couple of different fronts. Number one, from a clarity and a clear direction and a clear path going forward. Number two, from a liquidity perspective. Number three, so you can actually start implementing, from a CapEx perspective, from an ideation perspective, you can start moving forward. So I think we need the transaction to happen. I think post the transaction happening, I think that the rebuild plan, and we have, that's the kind of thing that we'd be happy to discuss and share. I think that's when we start kicking that into place. And the plan takes into account all the various things, starting with our employees, all the way to investment and implementation execution inside the hospital. So broadly speaking, I think you've nailed it. I think the impact, again, I think there's things we're doing to mitigate it. I'm really, I couldn't be any more proud of the organization and the team that we have. We haven't lost a single member of senior management with respect to people that we believe we want to have here, people that should be here. And the organization, quite honestly, has held up extremely well, remarkably well. I think this is the kind of situation where we're just we're just waiting to get some gas in the tank. And I think as soon as we do, I think we're going to take off and do really well. But right now, we've stalled a bit, but it's temporary.
So you don't think it's going to get worse before it gets better from here?
I think that I think these things are a bit unpredictable. But I would tell you that I can't, sitting in my position, if I started, and I don't think you'd want me to, if I started worrying about what was going to happen this afternoon or next week or the day after, I can tell you that when I look 3, 6, 9, 12 months out, I think that the organization comes back very, very strong on a very steady platform, growing. So, does it mean that today being Wednesday, Thursday, tomorrow may not be worse than today? It's very possible. But a year from now, we'll be in a hell of a better position. And I think 6 months from now, we'll be moving in the right direction. And I think long term, it's a great story still yet to play out.
Fair enough, sir. And my second question is on the balance sheet. First, we also had an investment in the Global Dynamic Fund, which we were in the process of redeeming. But it does not seem as if that's come back. What's the update on that? And second, now that we've taken a provision for the amount due, for the ICDs, what's our recoverable, plan to recover that amount from promoters? There was some news flow today on, promoters asking for the brand value that they are supposed to get for the Fortis brand to be offset through this recoverables. Your view there?
So, Neha, this is Gagan here. On the first question on the amount from the investment, that has come back. Okay. And that's why you see the cash and cash equivalents going down in the balance sheet. So that has been realized with So that's the first one. Now, on the second question in terms of the ICDs and the recoverability, we're taking all action around. So there's the current assets of the 3 companies that are pledged to us. So we're going after that. We're taking legal action to go and realize that. And yes, there's the element of the brand also in there, but that also we're taking action towards basically securing the brand.
So I just want to add on, I'm sorry. Look, we're taking a very aggressive approach to this. And as you rightly mentioned, it was referenced in the information we shared this morning. Whether it's the 3 entities or anything else, I think from a legal perspective, every possible road, every possible path we can take, we are taking. And look, we intend to be very vigilant about it. And we'll, as appropriate, we'll keep you folks updated. But to be very clear and to be very straightforward about this, our plans to be, and we have been, it's not something we're starting today, to be absolutely aggressive and get full recovery to whatever extent possible.
Fair enough. And my last question, if I may. Arindam, on SRL, we've been disappointed by the fact that, SRL had struggled to grow, even its revenue. And we've been talking about the initiatives we've taken for quite some time. When do you see, revenue growth picking up for SRL based on the initiatives that we have taken over the last year?
Sure. So as I spoke about when we started the last year, beginning we lost some customers and businesses, which we try to recover over the years. As far as the investment and plans are concerned, most of it is around marketing and brand investments and furthering our preventive part of the business. We are entrenched in that work. Yes, some of those investments do not see results pretty much the next day. So the way I look at it is clearly the future looks brighter. Does it mean that immediately our growth will start coming in? No. There has been a little bit of slowdown and a headwind that has been there. What Shivatsan also spoke about is we went out of the UP PPP, the Uttar Pradesh PPP business, effective March. So on a like-to-like basis, there will be growth, but obviously there will be a little bit of effect of the UP PPP. But apart from that, at an overall basis, we do feel that in a few months' time, the growth will come back.
Okay, thank you so much.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Sir, if you can throw some more color on the issue with the brand are we having all the requisite formalities in terms of having that brand with the company and not with the promoter? So what is the current status on who owns the brand? Hello.
Yeah, that's my question. Yeah. On the brand is still owned by a promoter company, and we have a licensing agreement which basically carries on, and so that's the status on the brand.
And how much license fee do we pay every year for this brand?
So it's for the hospital business, it's I think around 50 lakhs per year.
Okay, but is it like an agreement which will extend for a while, or in terms of the term of the agreement for having the brand license to us, what's the term of this agreement? Till when can we enjoy having the brand? And has the promoter got discretion in terms of revoking that license agreement?
So currently the brand agreement is, we had an agreement for 9 years, out of which we are approaching the third year, and that is extendable. So that's where basically
So the brand agreement is, it's not unlike many brand agreements. We pay a fee, which Gagan just talked about. We also pay a fee for the SLR brand as well. Combined for the two brands, we pay approximately 3 crore a year for the two brands, and they are right now we have brand licensing leasing agreement for both the brands, and we're not anticipating any change along with respect to that anytime soon.
Understood. And secondly, on the terms, my second question was on the terms of reference for this Qtr investigation.
Right.
So if I read the terms of reference, it looks more like the specific terms was relating to the investigation on the ICD itself. So, as shareholders, can we be sure of the fact that what Qtr has already investigated encapsulates all outstanding issues which may be there, apart from the ICD issue?
Look, if you look at the terms of reference, as you rightly said, it hones in on the brand, but on the ICD, sorry. But quite honestly, there are related components to it as well. That's number one. Number two is having, when the findings of the report are not solely focused on it, because quite honestly, A leads to B, B leads to C, C leads to D, and you end up looking at multiple things as well. So I think that the investigation has not focused solely on the ICDs. Quite on the contrary, it's focused on a lot more than that, up and down the system. That's number one. Number two is keep in mind that we have an internal audit team as well, and then we have the statutory audit, the Deloitte piece that was referenced a little while back by Ravi with respect to what they're doing, and we expect to again in short order be able to announce audited results as well. The other piece that I guess I would share is that by virtue of the fact that we've been in discussions with so many different prospective bidders, we've had diligence done from left to right, top to center, by multiple people. And when you have the likes, and without going into specifics, without talking about specific companies or names, but these are names that you are familiar with, some of the top strategic partners, top private equity people in the world, they've come in here, they've kicked the tires, they've looked around, they've gone through just about everything you can imagine from a regulatory, statutory compliance perspective. So I think that at this stage, yes, Qtr started with ICD, but quite honestly, it expanded beyond that, number one. Number two, clearly, anybody who's doing an audit here is putting in a lot of diligence to ensure, which we're good with, we're happy about. And thirdly, I think the fact that we've had an audit environment by virtue of all the diligence that's taken place in the hospital, I think as I would say to you, I would submit to you that there's a lot of kicking, a lot of checking, a lot of looks and peeks that have taken place that I would place a faith and value in what's being shared.
Thank you, sir, and all the best.
Thank you very much.
Thank you. The next question is from the line of Anand Agarwal from BlackRock. Please go ahead.
Thanks for the opportunity. I missed most of the opening remarks, so some of it might be repetition from that. Firstly, I have 3 or 4 questions. Firstly, could you talk a bit about, give us an update on the Arcot Road hospital? I mean, what's happening there, I mean?
Yeah, so the Arcot Road Hospital, just for everyone's information, this is a hospital we're really excited about. It took us quite some time to get our licenses in place. We got our license about 7-8 months back, and we are very, very excited because up until now we have one hospital in Tamil Nadu, which is the Muller Hospital, and the Arcot Hospital is a 180-bedded hospital, which is in a great location there. So the plan for the hospital is we're making India's first multi-organ transplant center, and quite honestly, it's one of the first multi-organ transplant centers in Asia, and we're very, very excited about it. So we have Dr. Balakrishnan, who's in Chennai, who does more heart transplants than anybody in Asia, and the third most number of heart transplants in the world. He will be running that hospital. It'll be under his guidance, under his mentorship, and we will have everything from cardiac heart transplant to liver transplant to renal transplant to bone marrow, so lung transplant. So we will build the first multi-organ transplant center and actually have a center of excellence around it. So the hospital has we've had some issues around having the appropriate amount of funds to get the hospital going. We've now allocated some funds. We're starting to move there, and I believe that hospital should be open by the end of the year. And again, I think that when this hospital opens, this is going to put us on a global map with respect to transplant and complexity and very, very specific activities that are taking place inside Fortis Healthcare. So coming soon, and a clear path. We've done a detailed plan around it in terms of what we're going to do, how we're going to do it. We have doctors knocking on our door. We have one of the leading liver transplant surgeons in the country who's come to us and said, listen, you're going to do this. I want to be a part of this. We have a bone marrow transplant gentleman who's doing he's one of the top 5 bone marrow transplant doctors in the country. He's knocking on our door. So this is going to be a very, very exciting hospital, and I imagine the next time we talk, we'll have more of an update, but a couple of quarters down the line, we'll be sharing with you the kickoff and hopefully what a great job that Dr. Bala and team are doing there.
Sure. And what has been our investment till date in this hospital? How much have we already spent on this?
With leasehold and equipment, I would say somewhere in the range of 140 to 150 crore.
Okay.
Thank you very much.
That's the first question. Second, on RHT, I mean, any update on the timelines and to the transaction and where do things stand? I mean.
So, look, you're aware, I'm sure, that our initial timeline was September, and while we're keeping that in mind, there is a correlation between our transaction and what happens with RHT. Having said that, we recognize that, and we have an understanding with RHT as well, that if there is a slight extension from a time perspective, we have till the end of the year. We can take it till the end of the year if necessary. So as far as we're concerned, there is a dependency on the transaction. I can tell you that every bidder, everybody who we're talking about, who's interested in Fortis Healthcare, RHT is a piece of the puzzle, and for all the reasons of which I'm sure you're aware of, it's an exciting part of the puzzle because it has a significant improvement on EBITDA once the transaction is done. So as far from our perspective, we're still excited about it. Dependency on the transaction, but I don't think too far down the line.
When does the transaction go to the shareholders of RHT for vote, and what is it contingent on, I mean?
So currently, Anand, there is a to and fro going on between RHT and the SGX. Only when there is a certain level of comfort, I believe that the SGX gets candidate voter unit holders. But like Bhavi was saying, that this is also kind of dependent on the visibility of funds or the plan that we will eventually get from the proposed bidder for the how do you get RHT into the fold.
Okay. And I don't know if you talked about it. Can you talk about the present liquidity position and how we are managing it? I mean, and how will we continue to manage it, let's say, for the next 2 to 3 months? I don't know. I mean, how long it will take even after the bids come through for the transaction to be completed. I mean, so how are we looking to manage the liquidity position in the interim?
So we've recently taken up a debt and that has eased the liquidity a little bit. We've got 125 crores, which we've just taken up. Alongside that, when we had free security, which was the RST shares, we have another line of around 340 crores, which we are discussing. And that should, once we are able to get that through, which is the discussion we are having, that should tide us through the period that we would have towards the transaction.
I think the other piece I just want to make a comment on is that because there was some speculation about RST, we are up to from a payment perspective in terms of our payment. We are completely up to date with respect to any extra outstanding payments with RST. So that happened about 10 days back. And as Gagan rightly said, we still have we've got a little bit of boost on liquidity with the recent funding that we got, and we continue to talk to banks. And look, it's no secret that there's once again a little bit of a dependency on what happens with respect to the transaction. But we are managing. The whole there's been unfortunately too much chatter about the fact that with salaries and things like that, we haven't had anything. Every single employee is paid every single salary to, so a little tight, challenging for sure. I can't tell you that we're running the organization exactly the way we'd like. There are some limitations around it. It has been hurting us. But again, we need to get our transaction done so we can start doing what we do best, take care of patients, and heal and save people's lives.
Okay, great. Thank you very much.
Thank you.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, good afternoon. Thank you for taking my question. The first one on ARPOB growth, I think this has been the slowest we have seen. And if you've seen historically, revenue have kind of been helped by ARPOB growing. Are we reaching some kind of limits into how much we can actually price some of the services? And the related question on fixed pricing and stuff, if you can just help give some color on this one.
Yeah, sure, Shyam. So a couple of things, Shyam. One is, obviously, your observation is exactly right. The growth that we've seen is not what we've been accustomed to. You and I have spoken many times about high single digit, low double digit. I stand by that statement even now and feel strongly about the fact that that's exactly what we can do. However, having said that, for all the reasons that we've dwelled upon far too much, quite honestly, we've had some challenges. I just now in the earlier conversation we talked about the liquidity challenges that we've been having. So it's been a bit of a struggle. As I said about half an hour back, I can't even tell you that we're completely out of the woods yet. I think it's a little bit of a challenge right now. But having said that, I do see, there's a roadmap in terms of how we get out of here. There's a roadmap in terms of how we get the revenue back to where we need it to be, where we think it should be. And there's clearly a roadmap from a profitability perspective. Now, if I talk about roadmaps, pricing is a good segue because there are some challenges around it. Now, the way we think about pricing, just indulge me for 30 seconds, a couple of different things. One is that are there pricing opportunities in the Indian healthcare market? The answer is absolutely yes. Absolutely. Is it what it was 5 years ago, where you could just 10% across the board? You can't do that. You cannot. I think you have to be very specific about it. I've always looked at pricing as a science and not an art. It's not random at all. And we've actually developed a complete pricing cell to understand, just from a demand perspective, from a talent perspective, from an availability perspective, and the elasticity model around it. And so I think there's some opportunities there, but I also think there's headwinds there because our industry is starting to see a lot of transparency in terms of pricing, in terms of everything else that happens inside. So, having said that, I don't think that that's going to be a big hurt for us. I think on the contrary, I think it's an ability to drive revenue further, drive margin value rupees higher. I think on an ARPOB perspective, our ARPOB will continue to grow. while I think that pricing is going to stabilize a little bit and potentially not go up as much as it has in the past, I think that medical procedures complexity, the fact that the number of transplants, for example, we do, or LVAD we do, or the robotic procedures that we're doing today, I think by virtue of that, the ticket size, the average revenue per occupied bed will continue to go up. Our revenue per occupied bed is almost 1.5 crore per bed. It is the highest in the industry. And if you ask me where I think it'll be a year from now, I think it'll be higher than this, not 20, 30% higher, but certainly higher. But I think it'll continue to do well as we go forward.
My second question is on the top 10 hospitals. I think we have seen I know you talked about North India where there were issues, but we have seen something like Mulund and stuff also decline. So I'm assuming some of this is driven by volume declines rather. ARPOB clearly has been flat maybe, right? So is there any kind of an action plan where we're looking at some of the top hospitals to see, what's happening there? Some of it could be related to the North Indian kind of issues that we had late December. But I'm just saying, is there something else that is structurally getting impaired in some of the other hospitals? That's the second question. Thanks.
So, Shan, in terms of the hospitals, yes, as we said, the headwinds and most of the hospitals have had that kind of an impact on the revenue and the growth side. There have been some of them that stand out, for instance, Shalimar Bagh as well as FMRI from they've not declined. But yes, there is, like Mulund, yes, there is a catch-up that needs to be done. So as Babdeep said earlier, we have built out a build-back plan, and that build-back plan will need to go across most of the hospitals, especially on the top few that make the difference. And we've chalked that out, and growth is going to be, because typically what's happened is that the revenue growth is being the challenge. So yes, there is a build-back plan that we have. We are going through a certain phase that we will then, claw back by implementing the plan, which will come pretty soon.
Okay. So I'm just looking at slide 17, my last question. So this T plus 365 is after closure of the deal. Is that the way to look at it? I'm just trying to see going from 64%. Okay, great.
Yeah. So that is the build-back plan.
Okay.
That's exactly right. And we've talked about just exactly what happens. We've started with our occupancy, where the occupancy is today and where we see it going. And this is, so you've heard me reference it a couple of times, the build-back plan. So we've talked about what do we need to do. The 4 buckets are, from a clinical perspective, brand. And brand doesn't mean a marketing campaign. Brand talks about everything that represents the brand that a patient sees or a family sees. We see, for example, digital and web being a significant piece of it. And so we've built it out in various buckets. And this is our plan going forward to get us back. So I think that, look, the way we've looked at it is we said that every percent occupancy represents anywhere between 4 to 5 crore in revenue per month. And that's the way we looked at it. And that's something that we worked out backwards, worked it back, worked it forward. And this is the way we see it happening. So, yes, you've hit it right on the head. This is the way we see it happening. So at T, obviously, T is a shareholder pool of a deal. And from that point on, we go forward. So this is, for every one of the points that you see here under each one of these verticals, each one of them has a detailed plan behind it, very specifically in terms of what we're going to do. I'll tell you something very anecdotal. I mentioned earlier that one of the things that's happened to us is our inability to recruit clinical talent. I can tell you right now that we have half a dozen, 7, 8 doctors right now that quite honestly are just waiting. I mean, they've actually, out of the 7, 8 of these doctors, 3 or 4 of them actually came knocking on our door. But they said, get your deal done. Tell us you have a clear path forward. Tell us that you're back to what you want to be, what you need to be, and what you're going to be at Fortis, and we're ready to join you. These 7, 8 doctors represent anywhere between 15 to 18 crore revenue per month. So we're talking about 200 crore a month, which potentially is 80, 90 crore of EBITDA coming right to the bottom line. So this isn't, when we say this, when we talk about clinical talent hiring, for example, this isn't some random thing. I mean, I can, if you and I were sitting face to face, I can tell you name by name, doctor by doctor, location by location, and why we think this is going to do what it's going to do. So there is a solid plan behind this. But again, we've had some challenges around it. We need to get past them. The Bill Black plan is the way we're thinking about it, and in the waves and in the sequence in the way we thought about it as well. And that's how we're aligning our resources so we can actually start implementing it.
Thank you and all the best.
Thank you, Shyam.
Thank you. The next question is from the line of Rohan Dalal from B&K Securities. Please go ahead.
Yeah, hi. So thanks for taking my question. So I was just looking into SRL. Aside from that, the hospital questions, many have already been answered. I really wanted to just understand what's happening with the SRL competition, because there's been a decrease in South India quite dramatically. Also, the average revenue per test has also gone down substantially. So I was just wondering, aside from the various concerns that I've already mentioned, what initiatives is the company taking and what kind of competition are you exactly seeing?
Sure. So just to talk about SRL with reference to both what you talked about in the test and the price mix, as well as reference to South India. Yes, our growth rate has been, as I said in the beginning, lower than what our expectation, and I wouldn't say that we are on a high growth path as we speak. Saying that, in terms of our mix has been adversely affected. Some of our lower price tests has grown a little faster than our high price test, so that has been one of the effects. Diagnostics obviously sees the competition from the local players. So in south of India, which is the smallest of our current regions, we have few strong regional players. And as of now, we haven't been able to put up a very good fight on the same. We have put in a new team over there. We have a very detailed plan that is in place. We have a detailed plan of opening collection centers. So we are, again, as we speak, over the next 100 days, we are talking about opening 100-odd collection centers. So we are going to increase our brand points across South. That is the one thing that we are clearly focused on, because our current presence in South is pretty weak. With that in mind, and the focused marketing investments that we are going on air starting end of next month, we do hope to see our growth coming back over the next few months.
Okay, so and the competition that you're seeing, is that coming in a big way in any other regions except for South, or have you seen a decline in competition basically in diagnostics so far?
No, I would actually say it's actually on the reverse. So we have seen strong regional as well as national competition pretty much in all the regions. So South India, definitely, there are both new players, significantly new players, as well as existing players becoming aggressive. We do have competition in West as well, which is our most competitive market, I would say. West still remains our most competitive market. We have seen an increase of competition in East as well from one of the diagnostic players.
Okay, so, and just aside from that, on a whole structural basis, I wanted to know about these various plans that are coming up, these collection point plans in SRL and the various hospitals that are being opened. Aside from 125 crores of funding that has been gotten, how exactly will liquidity be taken forward? I know it's been answered, but I just wanted a little more clarity on it, because there's so many different plans that are in place, and I was just wondering how exactly they're going to be executed.
So I'll just talk about the SRL part of it. It's actually nothing to do with linked with liquidity. All these collection points, first of all, are franchised, and we don't have a liquidity concern, and none of these collection points come with any investment from our end.
Okay, it's perfect for SRL. And in terms of hospitals?
So your question is on the in terms of hospitals on the liquidity?
So overall, in general, there are a lot of expansion plans and, new Ludhiana facility, and there are various types of upgradations that has been spoken of in the call. And I know it's been answered, but I just wanted a little more clarity as to what kind of liquidity processes are in place right now. Because working capital has also gone down substantially. So I was just wondering how exactly things are going to go forward. Is there going to be some type of equity raising or something? Or I'm not sure.
So currently our growth plans are brownfield-led, and basically we do have existing capacity to utilize. On the liquidity side, as I said earlier, we've been able to raise a debt and that has eased out our funding situation. In addition, we do have another line which we have built of another 340 crores, which we are working on to fund.
Okay, so this whole capex that will be required to fund this build back plan, that's in the presentation, the launch of the new LaFemme facility, the new block in BG Road, the new bed additions, the gamma knife introduction, the liver transplant center, all this, how much would it come to? Like, just approximately, like what's the estimate so far that the management has? Just because it gives us a good idea as to whether it's executable.
Yeah, so they're all very much executable, number one. There's number one. Number two is that so gamma knife is a piece of equipment. That's an equipment that we have to procure. So there's a cost attached to that, probably about 25 crores as an example. The other things that you've talked about are already work in progress, and a good bit of capital has already been spent. For the balance of this work, when you talk about BG Road, for example, a good chunk of the work has been done. In Noida, we have a liver transplant block, and that's certainly, that's a good chunk of that is done as well. So I would say somewhere between 60 to 80 crore, possibly approaching 100 crore. But recognize, keep in mind that we're talking about a transaction taking place here, which certainly one of the things we're looking to solve is some of the liquidity challenges we have, and I think we'll be able to take them forward. Thank you. Thank you very much for your question.
Thank you. Ladies and gentlemen, we take the last question from the line of Arjun Bhattacharya from Perpetuity Investments. Please go ahead.
Hi, thanks for taking my question. My question is on your hospital business that used to offer a run rate of around 140 crores per quarter before, issues your business. Come down to around 100 crores per quarter now.
Excuse me, this is the operator. Mr. Bhattacharya, I'm sorry to interrupt. Your voice is breaking. Maybe request you to come in a coverage area and use your handset.
Is this better?
Yes, sir. Thank you.
Yeah, so my question was on your hospital business, which used to do an EBITDA of around 140 odd crores per quarter, kind of a run rate, which has now come down to around 110 crores per quarter. So, my question is, by when do you anticipate this EBITDA to sort of come back to your previous run rate of around 140, 150 crores per quarter?
Look, I think it's going to take. I think it's going to take a couple of quarters. The bad news is that the numbers have fallen off. The good news is that at this stage, when you have the expense structure that we have, post a certain point in revenue, 60%. We have a 60% strain rate to the bottom line. So for us to drop, when we, if our EBITDA goes down 10 crore a month, we don't have to do 100 crore a month to make it back. If we do 18 to 20 crore a month, we get our EBITDA back. You heard me reference just a few minutes ago the fact that we have doctors who want to join the organization, who upon the joining of their organization can bring revenue in the range of 200 crore. That's 80-90 crore to the bottom line, right? There's your 8-9 crore a month number that you're talking about. So I think it's going to take a couple of quarters. I don't think it's an overnight thing. I don't think it's a quick fix, but I don't think it's going to take us 2 or 3 years either. The other thing is that as recently as the first half of the year, our EBITDA in the first half of this year was approaching 280 crore, run rate of 560. And if you'd asked me before all the industry headwinds, before all the challenges inside the organization, before all the other the various things that we've been hit with, quite honestly, I would have thought we would approach 600 this year. It's just been a function of these one-off, these one-time challenges we've had that we've had a little bit of a struggle. But I don't think it's years and years away. I don't think it's tomorrow. Quite honestly, as I mentioned earlier, for quarter one, it's going to take a little bit of time. I'd be lying to you if I thought that quarter one's going to display a masterful recovery. That would be great, but I think it's going to take a bit longer. But I don't think it's that far away. Thank you.
Okay, thanks a lot. That'll be all from my side.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Bhavdeep Singh for closing comments.
Thank you very much, and thank you all for joining the call today. As we started the call, as you heard from Ravi, with respect to what's happening in the organization, the whole notion of governance, and we look forward to, the management team looks forward to working with the board and ensuring that we have an exceptionally well-run system. I think there's a lot. We are facing some challenging times right now. It's been a tough road. Again, I've said this before, but I commend the organization because I think the people in the organization have just done a masterful job in taking care of our patients, continuing to do what we do best. We still have wonderful clinical things happening inside our hospitals, surgeries, first-time surgeries, people's lives either being influenced or saved every single day. So there's a lot to be excited about. We are looking forward to the transaction being complete. You heard me earlier reference the fact that the RSG transaction, which should be happening fairly quickly, as I mentioned, while there's an interdependency, we see it happening in the next couple of months, getting the transaction complete somewhere around August, September. So that certainly bodes well for the organization as well. So I think looking ahead, it's been a challenging year. Having said that, I think we're entering a point of stability, and I think that's important because we need to get to a steady state, and from that point on, we start to grow. So thank you all very much. Thank you for your continued support, and we look forward to talking to you again soon. Bye-bye.